As the U.S. markets are closed for the weekend, we are looking at the final figures from the last trading session on Friday, November 14, 2025. Rezolve AI PLC, ticker RZLV, closed the session at $2.95 per share, down slightly on the day by about 0.67% or $0.020. But in the after-hours market, it saw a small pop, gaining $0.040 to land at $2.99. Now, for the casual investor scrolling through their Robinhood app or their SoFi Invest account, seeing a sub-$3 stock with AI in its name is the modern-day gold rush. The expectation is that this must be a ground floor opportunity, a chance to buy the next Nvidia stock for the price of a coffee. This is the story of Agentic Commerce, a future where AI does the shopping for you. But the reality is, this $2.95 stock is one of the most intense, high-stakes battlegrounds on Wall Street. It's a war between a company issuing breathtaking multi-million-dollar press releases and a slew of short sellers and law firms alleging that the entire enterprise is a house of cards. Let's establish the common ground, because the narrative Rezolve AI is selling is frankly brilliant. It's perfectly engineered for the 2025 market. The company claims to be a pure-play AI leader, building the future of e-commerce with its proprietary large language model called brainpowa. They claim this model is competitive with GPT-4, but has zero hallucinations. This is the expectation. This story is then supercharged with a constant high-velocity stream of press releases. In just the last few weeks, they announced they are attracting industry titans from Apple stock, Google, and Microsoft. They have guided for an annual recurring revenue exit rate of $150 million by the end of this year, 2025, and a staggering $500 million by the end of 2026. This has analysts setting strong buy ratings with $9 parts at targets. This is the story that gets traders excited, the story that makes you want to hit buy in your Fidelity brokerage account. But here is the challenge, and it is the single most important fact of this analysis. You must contrast those projections with the company's actual numbers. The reality, as filed in the company's financial reports, is a different universe. For the entire first half of 2025, a period that just ended, Rezolve AI's total revenue was not $150 million, it was $6.3 million. The trailing 12-month revenue is just $5.3 million. Let's reread that. The company is projecting a $500 million ARR, but its actual TTM revenue is $5.3 million. This has led to a price-to-sales ratio that is almost a typo, over 200,000. This is a valuation that is not based on any recognizable financial metric. It is based on pure, unadulterated hope. But it gets far, far darker than that. While the company is burning through cash with an adjusted EBITDA loss of $17.7 million in the first half of the year alone, it is also under siege. A scathing report from short seller Fuzzy Panda Research in September alleged that Rezolve is not an AI company at all, but a legacy mobile phone business that suddenly declared itself an AI player. It claims, based on conversations with former employees, that the company's AI revenue is $0 and that its actual revenue was from selling soccer tickets. It claims the brainpowa LLM is just a ChatGPT wrapper. This short report, whether you believe it or not, has opened the floodgates. As of November, there are multiple securities fraud investigations from different law firms looking into these exact claims. So that 0.067% drop on Friday, that wasn't just market noise. That was the daily agonizing tug-of-war between the bulls and the bears. The bulls, the ones who bought the after-hours pop, are reading the company's press releases. They see the $200 million financing round announced. They see the new high-profile hires from Google. They believe the $500 million projection. They see a company that is misunderstood, a classic buy-the-dip opportunity for their self-investing portfolio. The bears, the ones who are shorting this stock on Interactive Brokers, are reading the 10Q and the legal filings. They see a company with $5.3 million in revenue and a $1.8 billion market cap. They see the fraud investigations. They see a company in a lawsuit with Yorkville over an alleged breach of a $250 million funding agreement. They see a company with a current ratio of 0.22, a terrifying sign of potential liquidity issues, which stands in direct contradiction to the company's own press releases claiming it's flush with cash. The $2.95 price is simply the trench warfare line between these two opposing armies, one of which is going to be catastrophically wrong. What does Rezolve AI actually claim to do? The business model is Agentic Commerce. The idea is you will have an AI agent that knows you, knows your preferences, and can be sent out to negotiate and buy things on your behalf. Rezolve's Brain Suite is supposed to be the platform for this, powering everything from product discovery to a one-tap checkout that can even use crypto. They've named over 100 enterprise customers, including massive brands like H&M, Ferrero, and Urban Footwear. This is the expectation side of the ledger. The reality side, per the short sellers, is that these are not the revolutionary AI partnerships you'd imagine, but rather that the company's core technology is unproven and its real business is something far more mundane. The flood of press releases in November about new hires and strategic agentic commerce plans feels like a direct, aggressive counteroffensive, a PR war waged against the short seller report and fraud investigations that came out in October. I want to know what you think, because this is one of the most polarized stocks on the market. Comment below, is Rezolve AI the next great investment, or is it the next great fraud? Looking to the future, the expectation versus reality framework is not just an analysis, it's a binary outcome. The expectation scenario is that the bulls are right. The short seller report is just noise. The $6.3 million in revenue is the tiny start of an exponential S-curve. The $500 million ARR is real. The $200 million in financing is in the bank. The new hires from Google will execute, and this stock is headed to $9 and beyond. In this scenario, everyone who bought at $2.95 is a genius. The reality scenario, however, is that this is all a fantasy. It's that the fraud investigations will find fire. It's that the company's true revenue is in fact negligible. It's that the $500 million projection is not a forecast, but a marketing slogan. It's that the company is burning its remaining cash to maintain this illusion. In this scenario, the $2.95 stock is not cheap. It's a ticking bomb on its way to zero. In summary, that tiny 0.67% move on Friday is a deceptive calm on the surface of a raging ocean. The stock at $2.95 is the market's way of saying it has absolutely no idea how to price this company. The expectation, sold by a masterful PR machine, is that this is the next great Nvidia stock in the making. The reality, as suggested by its own financials and a chorus of legal critics, is that it might be an empty shell company. This is not online investing. This is not a stock you add to a Schwab Intelligent Portfolios account. This is a high-stakes, all-or-nothing bet on which of those two stories turns out to be true. Disclaimer: this content is for informational purposes only. It's not financial advice, so don't make any decisions without doing your own research or consulting a professional. If you found this helpful, don't forget to like, comment, and share. Stay smart with your money.